Finance Committee, and then Council is overall responsible for approving the financial statements. The management responsibility for financial reporting, the last paragraph on there is fairly important as well. It says that we, Reed Hurst Nagy Inc., Chartered Professional Accounts, have been given free and full access to all the accounting records in order for us to conduct our audit. So nothing was withheld. Anybody that we needed to talk to, anybody that we needed access to, we were able to do. Okay. Before I go into the audit adjustment, I'm just going to go to the independent auditor's report, which is the next one over. It's really not on the slides, but so on the independent auditor's report, we've got the first paragraph is the opinion, which says we've given a clean opinion on these financial statements. The first and second paragraph. The second section is the basis for our opinion. So basically, we say we conducted our audit in accordance with generally accepted auditing standards, and those standards are uniform throughout Canada. The third section is responsibilities of management and those charged with governance. So basically, it says that management is the one that is responsible for preparing these financial statements, and those charged with governance is the one that's responsible for approving it. And then the rest of the stuff, they outline the responsibilities for the audit of the consolidated financial statements. It sort of explains our audit process, explains the fact that we identify and assess areas of risks of material misstatement. We obtain an understanding of the internal controls. We do some testing, and then from there we conclude if our testing shows that everything is true and correct. And then in the end, it says we've communicated with those charged with governance. Part of our audit process is that we have to propose some journal entries sometimes when we see some adjustments are required. For that, we propose the journal entries based on the work that we do and make recommendations for adjustments. But we don't have the right to adjust those records. Those adjustments go back to the finance department, and they're approved before we make the adjustments. So the next statement we're going to go over, we're going to get into the meat of the financial statements, is the consolidated statement of financial position, which is page 1. That's where we get the first page number out here of the financial statements. So on the consolidated statement of financial position, it shows the financial assets, liabilities, and non-financial assets. So if we're just taking a look at the equity, the overall equity of the nation as at March 31st, 2021 was $52,235,000. The accumulated surplus was $48,174,000 in 2020. So overall, we had an increase of $4,061,000 in equity, which is great, but some years there's going to be an increase, some years there's going to be a deficit based on the budgeted expenditures. So this excess this year, $4 million, in one of the future years, it will be used up, and there may be a deficit in that year. So we're going to go through the details of the statement of financial position. So overall financial assets was $89 million compared to $19 million the year before. It's a huge increase. The liability side is $81 million compared to $10 million, and I'll go through that in detail as well. Take the financial assets minus liabilities. We've got net financial assets of $8,037,000 compared to $8.5 the year before. I can say I've been doing this audit for a number of years, and this net financial asset number is quite impressive from where you had started a number of years ago to where you are today. The non-financial assets, $44 million, and you take that, you add it up, you get the accumulated surplus of $52 million this year. Just going into the guts of the financial statements. At the end of the year, we had $48 million in cash. Out of that, compared to $3 million the year before, but a large portion of that cash is deferred revenue that's earmarked for specific expenditures. We had restricted cash of $530,000. On the restricted cash side of things, you can see beside it there's a note number. So further on the financial statements, there's notes giving a further breakdown. So everything that's got a note number, there's explanatory information on it. Accounts receivable, we got $26 million. Compared to $2.3 million the year before. So if we go to the next slide over, because there's such a big difference between that, I wanted to bring that to everybody's attention. So on the accounts receivable listing, so this is note 6 on the financial statements, but on the accounts receivable, we had $1.4 million in receivables. We've got the government BC government funding, reconciliation funds of $23 million, $22,330,000. So that's why there's a big discrepancy from the year before, because of the fact that these funds were received subsequent to the year-end date. Would like to highlight there's some Government of Canada funding too, $1.3 million that came in after the year-end date too. I know the meeting before, there was the housing meeting, rents receivable, $5.2 million. And then if you look lower down on here, allowance for doubtful accounts, there's $5,023,000. So there's an allowance set up for some of those old rents as well. So going back on here, loans receivable, Note 7 has a further breakdown of that, $625,000. Long-term investments, $10,345,000. Note 8 has a breakdown of that. And the federal trust funds, Note 10, $2.3 million. So overall assets, $89 million. The bulk of it is in receivables. It was received after the year-end date, and in cash, which is a large portion of that cash is segregated out for targeted funds. On the liability side, we got accounts payable, $3.8 million compared to $3 million the year before. So not too much of a variance. It is a bit damaged deposits, so those would be deposits on housing units of $41,000. Deferred revenue. I'm going to go through the note on this because deferred revenue is $72,922,000, largest portion of the liabilities. Deferred revenue is funding that was received during the 2020-2021 fiscal period. That's for future periods. So it's not going to be used this period, so we set it up as deferred, and when we actually have the expenditures, we'll bring that into income. So if you go to the next slide over, I got to break down the deferred revenue. And for those of you that can't see that, because I'm having trouble seeing it from here, it's note 12 on the financial statements that we've got. So basically on the deferred revenue, we've got $72 million. Part of that is going down. $39 million is from the Heiltsuk reconciliation. I've been practicing, but forgive my pronunciation. $39 million is from there. We've got some money that came in from Department of Fisheries and Oceans, $4.9 million, and you can see it's all breakdown. On the provincial government funding, on the receivable side, I said there were some BC reconciliation funds that weren't received at year-end. Well, since they weren't received, they can't be spent, so we set that up as deferred revenue as well. So $22 million on there. Big breakdown, but you can see that $22 million plus the $39 million, so it's the largest portion of that, and they're all targeted funds. After that, we've got some replacement reserve fund expenditures. So that's Note 13. So that's required under CMHC. We have to have a replacement reserve fund balance. Every year we have to put some funds in there as required by CMHC. And then when there's eligible replacement reserve fund expenditures, we can charge to that. Loans payable, Note 14 has a breakdown of that. And the CMHC mortgages, $1.7 million compared to $1.9. You can see the mortgages went down by $180,000. The notes payable went down as well. So Note 16 has a breakdown of that. I take the assets minus liabilities, you get net financial assets of $8 million. And then we have the non-financial assets. Tangible capital assets, we got $43 million, and Note 17 has a breakdown of that. And prepaid expenses, we got $776. So there's some expenditures that were incurred during the 2020-2021 fiscal period. That's for the 2022 fiscal period, so they were set up as prepaid. Add that together, you get the accumulated surplus of $52,235,000. Just a graphic representation of this, going through, if we took the assets, put it in a pie, 54% of it's in cash. 1% of it's restricted cash, 29% of it's accounts receivable, loans receivable is about 1%, long-term investments, those are investments in all the different entities, is about 11%, and then the federal trust funds is 4%. So if you take a look at everything on here, really the loans receivable portion of 1% and the investment in long-term entities 11%, 12% of the $52 million of assets is really not easily converted into cash, but everything else is. On the liability side, we've got that in a pie as well. Going through, 89% of the liabilities is the deferred revenue, and then we've got a breakdown of the smaller amounts. Okay, so this is the consolidated statement of operations accumulated surplus, note 3. So total revenue for the 2021 fiscal period was $31,571,000. Expenditures was $27 million. And then we've got an annual surplus of $4,064,000. Going through, next one. Okay, so breakdown of the revenue. And everybody's got this. You can take a look on page 3. Total revenue was about $31 million that was received. That's net of the amount that went to deferred revenue of $47 million. So it's actually like $78 million that would have been received, and then we moved $47 million of it to deferred revenue. The largest portions of it was from ISK. There's $16,755,000 from ISK that came in. Usually the variances from ISK is year to year is usually to do with the capital program. So there were some capital programs going on this year. So that's what the major variance is. Then you had the Government of Canada settlement of $40 million that came in. CMHC got $5.6 million. There's some CMHC projects coming in as well. Other revenue, $4.7 million. And then going through, there's some other large amounts there. Province of BC 3.2, BC Housing 2.6. Take a look at it. So the breakdown of the $31 million. Going on the expenditure side of things. Next one over. On the expenses, we've got expenses, and these are in categories. So when you take a look at administration of $14 million, administration encompasses about 30 different programs that are in here. So it's not just administration. We've got social development. So the breakdown of all the $27 million in expenses. Take that, assets minus liabilities, you got the accumulated surplus of $4,061,000. Okay, going through, just in graphic representation, overall, for the expense side of things, we didn't do it for the revenue side of things, but for the expense side of things, 52% was spent on administration funds. Social development was 11%. We got some economic development. We got the Heiltsuk reconciliation, which came out to 9% there. Public Works 7%, and then some little amounts on there. Going over the next one. Okay, so the notes to the financial statements. I'm going to go through each of the notes one by one. I'm not going to read everything, but I'm going to let everybody take a look. So you need to have the financial statements in front of you. All right. So the note 1, it says basis of presentation and significant accounting policies. So this note is important to the users of the financial statements. It's important to the government funding agencies that take a look at it, and it's important to yourselves because these are the basis that of accounting principles that we use to prepare these financial statements. So, I'm not going to go through each one of them individually, but if you look at note 1D, it shows the principles of consolidation. So it shows what these consolidated financial statements are comprised of. So they have the organizations that it contains and the departments that it contains. Note 1E shows revenue recognition. Revenue is recognized in the periods where the expenses are incurred and the funding is received, and it's as per the terms of the funding agreement. And if there's expenditures that haven't been incurred, then that revenue is deferred to future periods. We got segmented reporting. Note 1G is a standard note on any type of PSAS audit, government audit, NPO audit, use of estimates. There's always use of estimates when we're doing financial statements. Note 1H, just loans receivable, and there's a contaminated liability site note on there. Note 1I is a good note. Tangible capital assets. It shows all the assets that the nation has and the depreciation rates. Note 2, just a standard note on comparative paragraphs. Note 3, economic dependence. So this note, if we don't put it in the financial statements, ISK is going to has a little bit of a check mark when they review financial statements. They're going to be like, where's the economic dependence note? Honestly, you can take a look from the revenue that was received during the 2020-2021 fiscal period. You're really not 100% economically dependent on ISK, but it's a standard note that goes in there. Note 4, budgeted figures, just says that they've been provided for comparison purposes. Note 5, restricted cash. So early on we had restricted cash, so you can see a breakdown of the restricted cash. There's the replacement reserve fund. Restricted cash is $251,000. If you remember, or from the presentation for a couple of pages ago, the replacement reserve fund liability was actually $450,000. So it's about $200,000 underfunded in the actual cash. The operating reserve fund's got $278,000 in it. Going through, next over, Note 6 just has a breakdown of the AR, which we've done. Note 7, loans receivables, has a breakdown of that. Note 8 just lists all the different investments, the long-term investments, basically through Heiltsuk Holdings Limited Partnership, because all the HEDC entities are sort of umbrella and then goes right into Heiltsuk Holdings Limited Partnership, and that gets consolidated into the nation. Note 9 just has a little bit of a further breakdown on the government business enterprises. Note 10, trust funds held by the federal government. So this is a breakdown of what's in the capital trust funds and the revenue trust funds, with the Ottawa trust funds as they're called. Note 11, just breakdown accounts payable. Note 12, deferred revenue, which I had gone through. Note 13, replacement reserve fund. It just shows what the balance beginning of the year is and contributions that you had to make during the year and some of the adjustments in there. Note 14 has a breakdown of the loans payable with the various BMO mortgages and the CIBC, and there's some 2 capital leases in there. And then on the bottom of Note 14, you'll see that over the next 5 years, there's a principal reduction on there. It shows the $274,000 for 2023, and so forth. Note 15 is just a land claims note payable, which was cleared up last year. Note 16, CMHC mortgages, breakdown of the mortgages. And then Note 17 has a breakdown of the different types of assets, capital assets that the nation has. It doesn't have all-encompassing list, but it's just a broad category. And then Note 18 is segmented information, just has a breakdown of the statement of operations in a different in segmented format, as required for PSAS financial statements. Note 19 lists a couple of contingent liabilities, if there are any. Note 20, related party transactions, which we got a note. Note 21 is on SOK settlement. And Note 22, subsequent events. Major subsequent event was entered in agreement to purchase the shares of Withston Holdings, which is the Shearwater Marina and all the enterprises over there. So we noted it on these financial statements. Okay, so notes to the financial statements, sort of went through it pretty quickly, but so next one we're going to go through this thick package that you have. It's in there. When I had mentioned administration, if we go a couple of pages in here, it says page 1 on there. It actually has all the breakdown of all the different programs in there. So administration, as you can see, there's a number of programs on there. And going through, I'm just going to explain how to read this one, the columns work. The first column is the ISK funding. The second column is other revenue. Third column is total revenue. So that shows the total revenue in that program. So the first one is administration and minor capital. You can take a look. The total revenue is $2.8 million. Total expenditures were $1.8 million. You take the revenue minus the expenses. You get an annual surplus, the current year surplus of $1 million. There is an opening accumulated surplus of $1.6 million, or 1.7 close to it. And then because it has some surpluses, there were some transfers that were done out to cover off deficits in other programs. It ended off with a minor deficit of $74,000. Going through, you can take a look. Flip the page over. Same with social development. You can see all the programs that were part of the social development program. Economic development, you can see all the funds that are there. We've got the reconciliation funds that are coming in. So the reconciliation funds is from page 56 all the way to, I think, 72 on there. It shows the funding that's come in the total funding. It'll have the amount that went to deferred revenue and some of the expenditures. For the most part, the bulk of the portion, they're all earmarked within its tenants or its segments, and they're all earmarked for future years. Through. Next sections are public works and Heiltsuk properties and then social housing. So I'm not going to go through in too much detail on there. And one over. And then going at the end, we've got the capital fund, land claims fund, trust fund. So that's the summary of 110 different pages. And then this has all the information on there. That's it for the presentation that I have. I'm more than happy to answer any questions on the Annex A as well as the consolidated statements.